finna get your ass the game, man. You know I break it down. Come on, man, you know it's Bain.
Yo, what's good, everybody? Welcome back to Bain Break It Down Forex. It's your boy Big Bain in this thing. And guess what? I got something for y'all today. All right? It's what I like to call the BBID strategy. All right? So we finna get into it, guys. You know, the moment. Again, I just know that, everybody's been trying to get, like, what is it all about? How do I really figure this out? How do I make some money in the Forex market, right? I get it. So without further ado, guys, I'm gonna hop right into it. Here we go. Boom. All right. So you're trying to figure out a strategy, right? You've been hearing about all of them and you just can't quite figure out which one you want to go with, right? You got trend lines over here, you got Fibonacci over here, you got MACD over there, right? You got supply and demand, right? You got them all and you don't really know, like, hey, which one should I go with? Why this one versus that one? And pretty much what I plan to do today, guys, is demystify, all of those, because they're all significant individually, but the combination of them all is where you really understand the truth in the light of, like, how to really, develop a strategy, like a strategy that is kind of soundproof and for the most part everybody goes by. All right, you'll see a lot of things that cross over when you understand one strategy versus another strategy. You'll be like, oh, so supply and demand is a little bit like support and resistance, and then Fibonacci is a little bit like, MACD or what have you, right? You know what I mean? You'll just find some correlation between the two strategies, and then eventually, if you try them all, you'll realize they all have something in common, right? So that one thing that they all have in common is kind of what I'm going to give you guys a high level overview today, right? Because this is how, I get into trades. This is how, I teach my team. And for the most part, this is the strategy that once you understand it, you know how to place all the other pieces together, right? And it becomes a little bit more simple, a little bit more complex. So let's get right into it. All right, boom. I'll give you guys a depiction first, all right, and just make it real quick and simple. All right, you got an uptrend, okay, making higher highs and higher lows, right? Basically what we want to see is when we make a run, we make a pullback, and then we break this high. All right, so follow me and follow me good, guys. I'm gonna take you all the way home on this one. All right, so you got your uptrend, and this is what we look for to get into a trade. It's very, very simple, guys. First thing that we're looking for is that we get a break of a high. All right, if we get that break, it's on and popping. All right, we're getting ready to look for our trading opportunity. All right, right from there, what we're looking at is what caused the break. So somewhere down here, there was a bullish move that caused price to break this high. All right, let me just adjust this a little better. All right, some kind of institutional buying, some kind of volume, some kind of liquidity or what have you, right? Caused price to go and break above this high. So when it did that, right, it created some sort of demand level. All right, and this is what we're focused on to get into a trade opportunity when price comes back. So everybody hears about the run and the pullback, but they don't understand how it correlates in regards to a strategy, right? The way that correlates is that if you're in a uptrend, when you're in the pullback phase is where you're looking to get into the buy. You're not looking to get into the buy when price is already gone high. Y'all should know that is the fundamental of trading, the fundamental rule. You don't buy high and you don't sell low. You do the opposite, right? You buy low and you sell high. So again, just understanding that one little simple thing, guys, will save you a lot of pain, because I know a lot of people who buy from the high, right, and then price pulls back, gets to this demand zone, right, during this pullback, but it takes them out on the trade, right? So they lose it because they were in the buy, but price started falling, so their stop loss gets hit. It taps into demand, and then it takes off, and everybody's like, oh, I was in a trade for a buy, I lost it, and then price went directly in my favor. Why is that? I know who did I hit right now? I heard somebody heart just now, right? I heard you say, yo, that's me, son. That's me all the time. What's going on? Well, I'm breaking it down for you right now. You know what I'm saying? What's really going on is that you don't understand. You're buying high and you're selling low. So hopefully I can demystify that and breaking down how this strategy goes. All right, but follow me guys real quick. All right, so again, the first thing we get is the break of that high. The second thing we find out was what broke that high, that demand area. Right, a lot of times you will also have fair value gaps that sit somewhere in this up move that broke this high. All right, so boom, bam, there's your, well, that's the hot pink fair value gap. We don't want that one. All right, I'm not feeling like that today. All right, but no, here's your fair value gap, and then you have your demand areas. Now you may also get price to make a little bit of a high. Wait 1 sec, hold on, let me get it right. It may make a little bit of a high like that. So now you can use Fibonacci to place it at the low and then place it at the high. So now you have these 3 points of interest, guys. All right, you got one, which is the Fibonacci area. Okay, you got another one, which is your fair value gap area. Okay, and then you have another one, which is your demand area. All right, so follow me and follow me good, guys. All right, when you get that break, it's go time. You're figuring out what caused the break. That's your demand area, right? Typically the last bear candle before all you see is bull candles. That's in a nutshell. All right, so let's not complicate that. All right, the last bear candle before you make that big push up and you see nothing but green candles, that breaks the high. It's the most important part. It has to break the high. All right, once that happens, eventually it's going to make a new high to where you make a swing. It's going to make a little swing high. Right, you're going to see price start to fall, and it's going to make that V shape. So now you have that swing high. Now it's potentially getting ready to start its pullback phase. So this phase that you see right here, right, boom, bam, right, coming on down, it's starting this pullback phase. See how it was up high and then turned around, but it pulled all the way back before it did this next run up, which broke this high. So now we're expecting this part right here, okay, to happen over here. You see what I'm saying? You can try to catch this pullback if you want to, but that's on another level. We don't really look to do that, right? We know how to, but I'm just trying to give you guys the strategy on the uptrend, right? So again, the strategy is you recognize that you're in an uptrend. Then you need to be able to recognize your highs, your swing highs. Once one of those swing highs gets broken, you simply look for your demand area. You look for your fair value gap. You look for any Fibonacci areas that you may have after price creates that new high. You wait for price to get to these areas, guys. Now again, you can try to catch it as it's falling to these areas. I don't recommend that, right? Unless you're very skillful and you understand how to read market structure, so you know that when there's a change of character, when it makes this high, it's getting ready to potentially start making lower lows and lower highs to these key points of interest, right? That's how you catch the pullback. But we're not worried about the pullback, right? We're worried about price getting to our key areas, mainly the place that majority of the buying took place in order to push price high enough to break this high over here. So you recognize these things, guys, these areas, these points of interest. All right, when you do, you look to buy from these areas. It's just that simple. Right now, when price gets there, you just want to see about 1 or 2 bull candles show up. 1 or 2 bull candles show up. That's giving you a little bit more extra confirmation, but you just really need to have a belief, right? You have to believe that price won't get below this low, because when it broke this high, it's saying, hey, we're a strong low. So if price happens to come back here, it's not going to get any lower than this. You have to believe in that. If you believe in that and you start taking your trades with that belief, you're going to start to see how real this is. And I'm going to give you guys a real life, a real chart example of that live. There's no editing here. There's, y'all going to see it's going to be real time, and I'm going to show y'all just how it worked, right? For both the uptrend and the downtrend. And you guys are kind of getting the gist of this already, right? In terms of an uptrend, but we can just flip it and turn it into a downtrend, and it's the same concept, right? Except in the downtrend, you're breaking some kind of low. So I'm gonna give you guys a quick example here. All right, you got your downtrend. All right, it's horrible drawing. All right, but eventually what it really boils down to is you have a run, you have a pullback, and then that next run breaks this low. Okay, so you see how in this uptrend we make this high, we make this low, but then we break this high right here. All right, so that's once we break that high, we know it's time to find the demand, find the fair value gaps, find the Fibonacci areas, wait for price to get to these areas, and look for our buying opportunity to say, okay, it's going to go and either get to this high or break above it. So anytime you're in the buy, you're just aiming for the next high. That's all you're doing, guys. You do that and you're going to be very surprised at the outcome. All right, but flip this whole thing, right, from the uptrend to the downtrend over here, and we got price making a low, a lower high, or lower low, and then lower high, and then boom, it breaks this lower low, right? Once that happens, it's game time. What are we doing? We're finding our supply areas. Boom. All right, last bull candle before all the bear candles showed up that broke this low. Just run that back if y'all not hearing me, okay? I'm repeating it as much as humanly possible to make you guys understand. Here is your fair value gap that it may create on that push down. All right, and then you also may have where price has created a nice little V shape, right? Like it's going to pull back, right? So now you can take your Fibonacci, place it at your high, place it at your low, right? Bring it all in, make it pretty, right? So just like in the buying example where you broke the high, you made the new high, but you had the demand, the fair value gap, the Fibonacci that are your points of interest to buy from. You have the same thing on the flip side in a downtrend. So when you guys are able to go to the higher time frame and read the structure, know that you're making a low, a lower high, and then this made a lower low, breaking this lower low, this previous lower low. Now you know that eventually price is going to make a new low, and then it's going to pull back to the area that it broke. It's going to pull back to a fair value gap. It's going to pull back to a supply area. It's going to pull back to a Fibonacci zone, maybe a pivot point, maybe a moving average, maybe a trend line. These are all points of interest, guys. So you recognize that. So all you do is simply wait for price to pull back to these levels, right? Whichever one it happens to be. You're going to wait for some bears to show up just to give you a little bit of additional confirmation, even though you don't need it. Because remember, this high broke this low, so that made this a strong high. So if this is a strong high, when price pulls back to it, it should not go above this strong high. This strong high should prove that it was strong by rejecting price and pushing it right back down to the next swing low. All right, this is how you make your money, guys. So we buy from the low, make our money to the next high, or we sell right from the high, and then we make our money to the next low. Guys, I hope the light bulb came on just now. All right, thumbs up, like, subscribe, you know what I mean? Make a comment if it did. All right, and now we're gonna head over to the charts. I've chosen to do AJ, all right, for you guys, the Australian dollars versus JPY, the yen. All right, and I'm gonna show y'all just how this goes live in full effect. Okay, so this isn't pre-scripted and what have you, right? This is just raw, win or lose. You guys are going to understand the concept and how this strategy is golden, right? This is how you pass all your challenges, right? This is how you finally get an understanding of what you're doing. This is how you only take one trade, or two trades, right? And you make a lot, right? That's what this is all about. So again, if you guys are looking for that, right? If you've been in the mix for a little bit, but you like, yo, I think I got it. I feel like I got it, but I don't know because I'm not seeing what I want to see, and boom, bam, boom. This is probably the video that, again, you've been waiting for your whole entire Forex life. All right. So what I'm going to do is hop down to the 1 minute, right? Because I'm going to go into replay mode, and I want to be able to go as low as possible to the lowest time frame. So that's why I'm doing the 1 minute. All right. And here you can see, right, just looking at the 1 minute. So I'm going to pull up replay. All right. If it'll pull up, come on. There we go. All right, going to replay. Now replay has this thing where you can choose these options: select the bar, select the date, or select the random bar. All right, so I'm going to do a random bar to show you guys that I'm not cherry picking a thing. All right, so boom, I hit random bar and it already cut price back to, it looks like we're at February 10th of 2025. Okay, so I'm letting you guys know that this is April 5th, right? And price is going back to February 10th of 2025. So I'm going to analyze the chart for everything that I just explained to you guys and show you how I incorporate that, I basically practice what I preach, right, on the charts, so that you guys can see it's for real, right? Because seeing is believing, right? And then right after that, you guys won't, you won't hesitate, right? You'll just simply be a believer, and y'all will start implementing this strategy to where you're seeing a huge success. All right, so here it is. I went to the 4 hour, but what I really want to do is just go higher and higher until I can really see like what's going on with price. All right, so I'm on the weekly, and I think this is pretty good, right? So I'm just going to try to read like what's going on, right? I'm trying to find what is the trend for the most part. All right, so before marking up anything, just trying to read structure, and it's kind of hard to read it. So just give me a second. Let me figure out what's what. Okay, for the most part, guys, it kind of seems like we're down. So let me show you guys. We got this high, we got this low, and then we got this lower low, and then we got this lower high. So just looking at this bit of piece of price action right here, and again, it's a long time. This is the weekly chart. So you can see from November or really October of 2024 all the way to February of 2025, right? So definitely been going down, right, for some time, right? So the weekly, I figured out we're in the downtrend. All right, just going to put a down arrow like this to represent that. Now I'm going to go to the daily. All right, follow me. So here, all right, guys, I can see market structure better now, right? I can get way more detail on this run, this pullback, and this run. And so now I'm going to clean up the chart, right? And again, I know we're in the downtrend, but now I'm going to show you how, because I know that we were in the downtrend, and I know that this was the run, here was the pullback, and here was the run. What did I tell you guys about the strategy? All you need to know is what the trend is, and now you're waiting for the break of a low. That is exactly what happened here, guys. So we couldn't have a better, replay place, right? It's hitting right on the money for everything that I'm teaching you guys, right? So here's your run, here's your pullback, and then price eventually breaks this low. Guys, what I told you is that you want to find your supply area, your fair value gap, your Fibonacci zones, okay? Your pivot points, your moving averages, your trend lines, what have you, right? Find those key points of interest, right? Wait for price to create a new low to where you see like a little bit of a V shape, right? That's it. When you get that V shape, there's your low, right? So now price is potentially going to pull back to where it broke, right? It broke right here. So it's going to pull back to that area and drop, or it's going to pull back to a Fibonacci zone and drop, or to a fair value gap and drop, or to supply and drop, right? Which one of these, the world may never know, right? The only way you can really tell is by when price gets to those areas. If you're starting to see rejection, possibly by wicks, or momentum, probably by the body of bear candles showing up, right? Those are your additional confirmations. Sometimes you can get to a very lower time frame and see market structure shift, right, from up to down, and that'll be your indication that it's ready to go and it's ready to fall. And when it does, you're selling from the high, and then you're taking price, your take profit, you're taking it to that swing low. It's that simple. Sometimes you get price to go way past this, right, which is a good thing, right? You get more profit, but you don't have to be greedy with that. You can just take your money to the lows and you'll be happy, because one, you're getting in a trade that's in the direction of the trend. The pullback is pretty much over with now, so you can get a nice risk to reward, smaller stop loss, etc., etc. There's so many benefits to using this strategy when you understand how to use it. All right, so here it is, right? We're getting ready to break the low, so I'm going to clean this up. All right, hold tight. All right, boom. So again, I'm going to show you right here, we broke the low. All right, so that is a break of structure. All right, what broke the low, right? And I preached that to you guys, so now I'm going to practice it. Here is an area of supply that broke this low right here. So let's kind of make it all pretty. Here's the low, and we'll make it like that. All right, boom. Okay, so that broke the low. All right, so now again, this looks like we created a new low, right? We got a little bit of a V shape. It's not defined on this daily time frame. So what you can do is go to a lower time frame. And really quick, just to explain, why is this supply? I'm sure somebody's asked that, right? It's because as I see price falling, right, I'm looking to see what actually initiated the break of this low. So as price is falling right here, you can see it did not break the low when it came to this area. As a matter of fact, it wicked out, right? There's no body of candles below this low. So this is not an official break, right? This is an attempt to break, but it failed to break, right? So then price pushes up a little bit more. And now from this area, we had bears show up that eventually broke below this low with the body of the candle. So when we're talking about breaks, guys, we're talking about bodies of candles, not wicks of candles. And again, this is something that'll help you guys out tremendously when you put it into play and keep it that way, right? Go with the breaks of the bodies, not any particular kind of wick. So knowing where that initiated from was key for me finding my supply area. All right, but now if I go to the 4 hour, right, which is multi-time frame analysis, what I'm teaching you guys, right, in a nutshell of just giving you guys a strategy, right, here I'm looking at the 4 hour, and now I can fine tune my markup. All right, so this is what I'm going to do. I'm looking for that area once again that initiated the break of this low. So really it's over here. All right, so let me zoom this in for you guys and really kind of show you. Over here was that last bull candle, right? This one was the last bull candle here before the bears showed up and completely dropped, breaking this low at the cross of this blue line, right? So I'm going to mark that whole candle, right, this whole bull candle as my supply area. I just want y'all to peep what happened when it made this low. It pulled back into this supply, and this is what I tell you, you guys are going to wait for it to pull back into that key point of interest, right? Supply was one of those, the highest. And again, this is a strong supply because it broke this low. So if price pulls back to it, which it did in this case, it wasn't strong enough to get above that high. So this supply area is proving that it's strong by pushing price down when it gets to it. It's simple stuff, guys. All right, so now I'm looking to see if price is going to, in this run, did it break this low? Now it kind of looks like it did, you know, because I know some of these wicks may be body candles, but I gotta get lower in order to see that. So I'm going to put a break here, right? I'm going to say it broke this low. So somewhere here we had body, you know, candles that broke this low. But now let's go see, right? Go to the 1 hour and see if we see any body candles. And for the most part, I'm not seeing any body breaks, right? Still wicks, and I'm on the 1 hour. So I got to get lower, 15 minute. Okay, boom. Now I see that we actually got a break. All right, so there's your candle body breaking, right? This is also, it broke inside here, but this one broke outside. But regardless, that break outside is the break. So if we broke this low, the cycle continues. I'm figuring out what broke this low, right? Where did price come from, right? Ended up making it break this low. And I see that area right here, last bull candle before all the bears showed up, breaking this low and then eventually breaking this low, right? So this would be my supply area. So now I'm marking that out. Okay, pushing it like that. What do you know? Once we broke below this low, right, we came back, retested that supply area, dropped down, broke this low. Okay, so you probably can't see it, you know, too well here on the 15 minute, but that was another break of the low. So what caused that, right, is this supply area, but it went past that. All right, so we're kind of in a mix right now, and you can see the double bottom, right, the equal lows. So even though it got to this supply area, you know, after it broke this low, right, got there, it dropped, but it didn't get any lower, right? So technically it kind of looked like it, you know, broke, but it really didn't get any lower. So we're making equal lows now. Anytime price can't get lower, there's an indication that it may begin to go higher. All right, so now I'm saying to myself, man, I was looking for, let me go back to a higher time frame. Okay, so I was looking for sells, right? We broke this low over here. We found out from the weekly we're in a downtrend, right? This is all your run, this is all your pullback, here's your run. So we should have a pullback, right? We did. We had it to this supply area and then we came down, but we started failing to get lower, right, guys? This is a tattletale sign. right? When price is failing to get lower, it's telling you that, hey man, we ain't trying to go no lower. So we might think about going up, right? If you can catch, us when we go up, cool. But you got to read us. Okay, I got to read you. Okay, cool. Let me go back to the 15-minute time frame and let me read this price action, this market structure, right? You guys were making lower lows, lower highs, all of this, right? But then on this push up, you guys broke this high. This was a lower high, right? That should have went and made a lower low, but it didn't. It rejected the lows. And as it pushes up, it made a new high, breaking above this high. So even though we're still playing around in this supply area, right, we've had a change of character, breaking above this high. Okay, so all of those selling opportunities that I was looking for before has gone away, because there's no more of price getting lower, and now it's getting higher, right? So I need to start looking for buying opportunities. So here we go now to the flip side of the buy that I taught you guys about earlier in the video, right? Where I say, if we're making, uptrend structure, we want to see a break of a high, which is what we got. So price went high. This was a lower high, but then it came down and it did not make a lower low. So it pushed up, and now it made a new high, breaking above this high. So now we take into consideration the concept behind the strategy, the buying strategy, right? For the BBID strategy, right? So here again, guys, we broke a high. We had to change the character. What caused that break, right? Then I'll teach you guys that. Remember to go find it. Boom. Here, in essence, is the last bear candle before all the bulls showed up and eventually broke above that high. Got it. So I'm gonna map that out, right? Kaboom. There's our demand. Is there any fair value gap? Yep, sure is. Right above demand, right? So again, these are points of interest that price may pull back to before it gives you your opportunity to buy. Again, you don't want to buy here, right? Because we just broke a high and we made a new high. So if you buy here, you're buying high, right? Don't buy high. You understand what I'm saying? Buy to get high, but don't buy high, right? You know what I mean? It's not the way you want to play this, okay? So because of that, we need to wait for price to pull back to these points of interest: fair value gap, demand zone. And now, because we have a low and a high, you guessed it, I can place Fibonacci on from that low to that high. And now I'll also have a Fibonacci area that is a point of interest. I'm going to just go ahead and map out this fair value gap that I see right here. All right, and all we really do, guys, is wait for price to react at these levels to see if it's continuing to make uptrend structure or not. So here we go. All right, I'm gonna try to get into this trade. So let's play it forward. All right, I'm waiting to see if price is going to start pulling back to any one of these areas. Hopefully the demand area, because that's the lowest point, that's the most discounted, and it's what really initiated the break of this high to the left, right? So let's see. All right, boom, 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 boom. All right, look out, wants to look like it pushing up, right? Keep going. So at this point, everybody's convinced to buy, and who knows, it may very well take off, right? But I know these areas haven't gotten got yet, right? And that's another little tidbit, to the strategy. You guys have to be patient, right? Because everybody understands it, but you also have to put patience to it, right? Because you can see it, but then as you see price continuously go away, you're thinking to yourself, oh, I'm missing it, right? FOMO starts to kick in. So you go and you buy it, and eventually it still comes all the way back and do exactly what we were expecting it to do, right? So you gotta be careful with that, all right? But here it is. Let's just see if it takes off or if it pulls back. All right, boom, boom, boom. All right, seems to be dropping right now. Okay, keep going, playing with us, going sideways, but now dropping some more. All right, sideways. All right, let me get it in a little bit more. Hold on, here we go. All right, seems to be going higher now, and then okay, so now we didn't get what we needed, right? So this is where, again, you don't get a lot of people who don't take the trade, right? They see prices going away and they chase it, right? You know what I mean? In this instance, it happened to play out, right? A little bit. Again, if you can still see, if they bought high, it still pulled back and it played around for a while before it really took off, right? But you'll have these situations where price will not give you that pullback, in a timely manner, if you will. All right, so now we need to go higher, okay, and look at what happened. All right, so again, we were in that downtrend, we fell to get lower, and now this pullback has begun, but it's gotten to this supply area that we had on probably like the 4-hour. Let's see. All right, so it came from over here, but now the new, well, actually that's the same supply area, because when we were here and we pushed down, we didn't really break below the lows. So this supply pretty much stays the same. So price is at the supply area now. Let's see how it reacts on the 4-hour. Boom, shot all the way up into, you know, supply here. All right, so now I'm going to go to a lower time frame, and I'm going to see, are we going to get a selling opportunity because it's so high. All right, and all right, so I'm just going to see now if it's going to like respect this high or if it's going to start dropping. All right, so let's get there and let's see. All right, so I can see that it pushed up pretty, you know, pretty close to the high, and now I'm starting to see a little bit of a change of character. Okay, so I see that we made like a little bit of a higher low, but we failed to make a higher high. Okay, and then we broke and made this new low. All right, so I got to see what price does from here. So this is a good sign that we got to change a character, because it's saying that we've gone from uptrend or upstream market structure to now potentially downtrend market structure. And this also looks like a bit of a double top, right, with these two highs being pretty much equal on the price points. Okay, so let's go and see. All right, so prices right now respecting this area. So since we broke this low, this will be again our supply area right here. Right, we do this day in and day out, guys. Recognize where the break is, and then recognize where did the break come from, finding our supply areas, our fair value gap areas, our points of interest, guys. All right, again, if you incorporate this, if you rewind this back and start the understanding and really start the market up and see what's what, you guys will be super surprised. All right, so now again, we've broken that low, we found supply, we found the fair value gap in the area that it broke. There's another fair value gap right here that it just tested. All right, it's right there. All right, so now again, what we would want to have is some kind of sell limit order right in this area to have price pull back to get us in a sell with the tight stop loss above this, because again, this strong supply broke this weak low. So if price is to come back, it shouldn't get above that strong high. So we're going to see eventually, by the time, you know, I get what I need to get into the trade. All right, so now I'm going to keep playing it out, see what happens. What do you know, price pull right back to the supply area in the fair value gap right at my order, guys. So technically I'm in this sell right now. I got what I need, so I'm gonna sell it right now, even though, you know, I should have sold it back. You know, it was really sold here. All right, so I'm technically already up. Let me do the math. All right, I'm up 28 pips on odd JPY, and that took no time. We are on the 15-minute time frame. Can y'all see that, making 28 pips in 15 minutes on a standard lot? That's $280 in 15 minutes. I wonder who you're gonna go, you know, brag to and let them know, hey, you know, I made more than you make in an hour or whatever, right? Here it is. So really my position is from up here. All right, but I'm just gonna put the sell on right now where it is. I'm gonna put my stop loss right up there. All right, and now all I'm gonna do, guys, y'all remember that area that we were waiting for price to mitigate and pull back to when it was here, when it broke the high right here and it made that new high, and I said, guys, waiting for it to pull back here. I bet you bottom dollar it's going to pull back to these areas now, right? So now I can use these as my target areas. Okay, and if I go to the higher time frame, right, like the 4-hour, all right, I can see that, yeah, price most likely can still, I can still like adjust my Fibonacci now, because here's a new low and then here's a new high. So I can put Fibonacci at the low right there, and then I can place this up a little more at the high, and now Fibonacci says we should at least get somewhere up in this area. Okay, and again, we broke a high right here, so I know we found it on the lower time frame that we broke it right here, but then we had a break of structure right here to the upside. Okay, so once again, hopefully I didn't lose anybody, right? But once again, we had another break of a high. So what do? Find out what initiated it. And basically it looks like, these are the full body candles that kind of broke above. So I'm going to assume right here is our last bearish candle, right, before price breaks up to the high, right? So this is where our demand area is, okay, and where I'm going to put my take profit right to that area. All right, now this is way more. See, I'm already at a 1 to 5, so 1 to 2 would have been, let me go lower so you guys can really see. All right, so here would be a 1 to 2. I would have almost made my money because I got in up here and price is now down here, so I would have easily made it 1 to 2. But just aiming to this demand area, guys, gives me a 1 to 11, almost 12 risk to reward. So basically how that works is if you risked $1,000, guys, you made about $11,000 to, if it hits the take profit. All right, so that's pretty much all that we ever look for: the break, the retest, the bears to show up. I literally have everything I need. Now, of course, we can lose this trade, right? It's just what it is. It's what the market does. We don't know if there was news. We don't know what happened between the yen and the Australian that could have caused some kind of fundamental or economic effect, right, on the chart. But from a technical standpoint, this looks beautiful for a sell. So I'll go ahead and sell it, which I've done. I'm up 28 pips, but now I'm just going to play this out and see if it actually comes down to any of these areas that we were expecting it to get to when price, changed character from down to up during this, pullback to the supply area. Now let's see if there's still enough supply to bring it back down to these demand areas. All right, so for all the marbles, guys, 3, 2, 1, play it out. Looks like I'm in profit. All right, and then I lose the trade. But basically what happened, guys, is it came right back to an area that it broke, right, and just decided to shoot up and make another higher high. So here I still made, again, way more than I needed to, right, from a risk to reward standpoint. Let me get to 5 minute. All right, so again, I got in from here. You guys, got to remember that part, because I know it pushed down and it showed, that's where we entered the trade. But I got in from right at, my target was perfect. I mean, it was just picture perfect. Hit it. I got away with a 10 pip stop loss on 100 pip. Well, I think this is 10 pips. All right, because yeah, let me see. We got about, let me see. Yeah, that's 10 pips. I got away with a 10 pip stop loss, guys, and I ended up making, really, if I would have just went for 1 or 2, it would have been 20 pips, right? I made that in the first little push down that it did on the 15 minute. But you can see price went all the way down to here, right? So that's about 60 pips, right, on the odd JPY that I would have made in, no time. So like, let's just really stretch it over, all right, to right here when it hit that low, right, from where I got in, right, which is right here, to where it hit the take profit. That was 5 hours and 35 minutes to make 60 pips, guys, right? And with a 10 pip stop loss. That's ridiculous. Do you understand what I'm saying? That was a 1 to 6 risk to reward. Again, if you spent 1,000, you made 6,000, right? But this is how the game goes, guys, and I can show countless examples, but I'll just make more strategy videos for you guys to get you to really kind of understand the concept. But hopefully, I was able to break it down and let you guys know how it goes down and how you guys might want to start implementing, all the combinations of the different strategies that you guys have learned and put it into this one BBID strategy, okay? Because again, it's all encompassed on one another, but you just got to know how to read it from a higher time frame down. You got to know how to be patient, wait for price to do its thing, and you got to know how to continuously put that concept into every bit of breaker structure that you see or change of character that you see. But it has to line up with the higher time frame. So you see the uptrend on the higher time frame, you need to be looking for price to be, or getting ready to be in a uptrend or go in a uptrend. So if you see price falling, you got to wait until you see price beginning to rise so that you can get into the buy. Most people don't do that, and that's why most people don't have success with their strategies, and they don't really know that part. But again, if y'all trying to figure this out, y'all need to get with me. forexwithbain.com. All right, click on the link, join the Discord. I promise I'm gonna get you right. All right, but meantime, in between time, y'all know what it is. It's your boy. Peace.
Wanna get money? Wanna get paid? That's Forex. Like a sensei, then you know you gotta come and swing my way. And if you wanna fast forward, hit replay.